Amazon hits $3 trillion market cap, what this means for the economy. Hook 0 to 10 seconds. Amazon just crossed the $3 trillion mark. For the first time in history, one company is worth more than the GDP of most countries in the world. This is not just a number on a screen. It represents a fundamental shift in how our economy works and who holds power in the global marketplace. Here is what this means for you. Chapter 1: The Historic Milestone. On August 3, 2026, Amazon's stock hit a brand new all-time high, pushing its total market capitalization past the $3 trillion threshold. This makes Amazon only the fifth company in the entire history of the world to ever reach this incredible milestone. The last company to do it was Nvidia earlier this year, and before that, Apple and Microsoft. To put this in perspective, Amazon's market cap is now larger than the entire GDP of countries like Germany, the United Kingdom, France, and India. If Amazon were a country, it would be the fourth largest economy on Earth, trailing only the United States, China, and Japan. That is a staggering amount of wealth concentrated in a single company that started as an online bookstore just 3 decades ago. Jeff Bezos, the founder and executive chairman, saw his personal fortune increase by billions of dollars in a single day as the stock price climbed to new heights. Chapter 2: What drove the surge? So what caused this massive surge in Amazon's valuation? The answer lies in the company's latest earnings report, which came out just last week. Amazon's cloud computing division, known as AWS, reported a 39% operating margin, which is extraordinary by any standard. This means that for every dollar AWS earns, nearly 40 cents falls to the bottom line as pure profit. AI demand is fueling massive growth in cloud services around the world, and Amazon Web Services is capturing the lion's share of that spending. Companies from small startups to national governments are rushing to build AI infrastructure, and AWS is the platform of choice for many of them. Analysts at Goldman Sachs and Morgan Stanley have both raised their price targets on Amazon stock, citing the AI cloud boom as the primary driver of the company's impressive growth trajectory over the next several years. Chapter 3: The Broader Economic Impact. Amazon's dominance at this scale raises important questions about the future of competition and the global economy. When one company controls so much of the cloud infrastructure that powers the internet, what happens to smaller competitors? Thousands of tech startups depend on AWS to run their businesses every single day. If Amazon decides to raise prices or favor its own products over third-party sellers, it could crush competition and stifle innovation in the process. There are also serious concerns about job displacement. Amazon's massive investments in artificial intelligence are already automating warehouse operations and retail processes across the country and around the world. The company currently employs over 1.5 million people worldwide, and that number could shrink significantly as automation accelerates in the coming years. Economists are watching this closely because the displacement of workers by AI could have ripple effects throughout the entire global economy, affecting everything from consumer spending to housing markets to small business formation. Chapter 4: What this means for everyday investors. For everyday investors watching from the sidelines, Amazon's $3 trillion valuation sends a clear and important message. The stock is expensive. The price-to-earnings ratio is well above the historical average for the technology sector and the broader market. Some Wall Street analysts are warning that the stock is priced for perfection, meaning that any disappointment in future earnings could trigger a sharp and painful correction. However, long-term investors see Amazon as a core holding for the next decade and beyond. The company's diversified business model spans e-commerce, cloud computing, streaming entertainment, grocery delivery, and logistics. This diversification gives Amazon a resilience that most other companies simply do not have. When one division faces challenges or market headwinds, the others can pick up the slack and keep the overall business growing. That is why many financial advisors recommend Amazon as a staple in a balanced and diversified investment portfolio. Chapter 5: The Bigger Picture for the Economy. Amazon reaching $3 trillion is a sign of the times we are living in right now. The AI revolution is creating enormous wealth for a handful of technology companies at an unprecedented pace and scale. Microsoft, Apple, Nvidia, and Google are all approaching or have already surpassed the $2 trillion mark. This concentration of wealth in the tech sector is something that has never been seen before in modern economic history. It raises profound questions about economic inequality, market competition, and the appropriate role of government regulation in a free market economy. The scale of Amazon's operations is almost impossible to comprehend. In a single quarter, Amazon processes over 1.5 billion packages worldwide. Its AWS infrastructure handles roughly one-third of all global cloud computing traffic. The company employs over 1.5 million people across more than 100 countries. This is not just a company, it is a global economic institution that touches nearly every aspect of modern commerce and digital life. The concentration of market power in a single company also raises questions about innovation. When one company controls so much of the cloud infrastructure that powers the internet, what incentives does it have to innovate? Critics argue that Amazon's dominance could actually slow down technological progress by making it harder for smaller, more agile companies to compete. They point to instances where Amazon has been accused of copying features from third-party sellers and then outcompeting them in the marketplace. These concerns are not hypothetical, they are being actively debated by regulators and policymakers around the world. The European Union is already investigating Amazon for potential antitrust violations related to its treatment of third-party sellers on its marketplace. In the United States, Congress has held multiple hearings on tech monopolies and the growing power of big technology companies. The question on everyone's mind is whether regulators will step in before one company controls too much of the digital economy and the flow of information online. Chapter 6: Looking Ahead. Amazon is also expanding into new frontiers that could define the next decade of technology. The company is investing heavily in artificial intelligence research, with its own custom chips designed specifically for AI workloads. Amazon's robotics division is developing autonomous delivery vehicles and drones that could revolutionize the last mile of package delivery. The company is also making significant strides in healthcare, with its Amazon Pharmacy and One Medical acquisitions positioning it as a major player in the healthcare industry. However, Amazon faces growing headwinds from regulators and lawmakers in Washington and around the world. The European Union has launched multiple investigations into Amazon's business practices, including how it uses data from third-party sellers to inform its own private label products. In the United States, the Federal Trade Commission has been actively pursuing antitrust cases against major technology companies, and Amazon is squarely in its sights. The outcome of these legal battles will have profound implications for the future of e-commerce and the broader technology industry. The coming years will be critical for Amazon and for the global economy. As artificial intelligence continues to transform industries and reshape the way we live and work, companies like Amazon will be at the center of these changes. Whether that is a good thing or a bad thing depends on the choices that regulators, business leaders, and consumers make in the years ahead. One thing is certain, Amazon's $3 trillion valuation is not just a financial milestone. It is a reflection of the enormous power and influence that technology companies now wield over the global economy and over our daily lives. Looking ahead, Amazon shows no signs of slowing down or losing momentum. The company is investing billions of dollars in artificial intelligence research and infrastructure build-out. It is expanding its logistics network to deliver packages faster than ever before to more locations around the world. It is also pushing aggressively into new markets like healthcare, financial services, and even space technology through its various subsidiaries and ventures. Amazon's ambition appears to know no bounds. But with great power comes great responsibility, as the saying goes. The company will face increasing scrutiny from regulators, politicians, journalists, and the general public. How Amazon navigates these challenges will determine whether the $3 trillion milestone is just the beginning of something even bigger or the peak of a company that grew too fast and too far for its own good. Conclusion: Amazon's $3 trillion milestone is more than just a financial milestone or a headline number. It represents the power of the AI-driven economy and the growing influence of technology giants in our daily lives and in the global economy. Whether this is a positive or negative development depends on how regulators, investors, and consumers choose to respond in the coming years and decades. Subscribe for more analysis of the biggest stories shaping our world and the global economy. Drop a comment below with your thoughts on Amazon's valuation and whether you think the stock is worth the current price. And hit the notification bell so you do not miss our next video. End.